people want to be involved in things that they believe will withstand the test of time, right? And that's how they're, whether it's conscious or subconscious, that's how they're looking at it. And so if they're going to participate with you and become a partner in your business ostensibly or tangentially, then those things all sound good. I want to know that you know how to run a business. I want to know that you know how to hire people, how you manage people, how you lead people, right? That you stand for something, that there's a method to your madness, you have process, you have all those things. So to me, if you get good at those things, that's when, and then those should lead to finding great deals, right? And then you find great deals and your ability to execute and add value to those projects and, run the business plan and you get the results. Like those all go hand in hand. I just think everyone kind of overlooks that, thinking, I just need more followers on LinkedIn. I'm like, yeah, you do, but like that's the secondary. That's like secondary to like, do you have anything interesting to say? Are you interesting? Yeah. Right? And are you building something that's worth wanting to be involved in?
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
Lance, welcome to the show. How you feeling today?
Feeling good, Peter. How are you, my man?
I'm doing very well. So happy to be talking to you. Very much looking forward to this episode. I think there's going to be a lot of golden nuggets throughout. So we'll start with an introduction. Lance, who are you? What are you doing? Why are you here? All that good stuff.
Sure. Yeah. So, I've been in the real estate business for a long time now. I got in 2008. Former life was I've been an entrepreneur my whole career. So I got started in IT. So I built an IT services company from nothing to over 5 million in revenue and sold that in 2007. And then got into real estate on the private lending side, hard money lending, commercial real estate, Pacific Northwest. So that's kind of dipped my toes into the fund side of the business. So we had a debt fund and then we pivoted into allocating capital, mainly it's equity investors, so raise money from high net worth individuals and family offices, and then started allocating into operators and other lenders and other funds through our fund. And so that's kind of, where I had an interesting seat at the table here, is sort of being super LPs, figuring out, where the market is and, what types of things we want to invest in, vetting operators and, conducting due diligence on deals and obviously raising money from investors. So we were able to, raise quite a bit of money from investors. And then we had, it's sort of an accidental business, which was a back office fund administration company that we ended up, started doing back office accounting work for a lot of the guys that we were allocating capital into. It wasn't necessarily their strength, and that really took off. So that went from just being a kind of the thing we did for our own account to make sure the books were being done right to a full blown offering. And, we ended up growing that to over 3 billion in assets under administration. And so we had an advisory practice where we helped guys kind of go from serial syndicating into running funds. So I've had like I said, an interesting seat at the table, just being able to talk with lots of operators, learn a lot of these strategies. And so a few years ago, kind of parted ways with my partners in those two businesses and just went out on my own. And so, now I'm, consult with operators. I run a training program to help emerging, operators and allocators and lenders kind of grow and scale, so it's raising money is the straw that stirs the drink in this business. So if you can't, you might be the greatest operator or lender in the world, but if you can't attract outside capital, then, you're never going to grow, right? Your ambitions will sort of outstrip what you're, capable of doing. And so, and then on the other side, so I've always had a heart for the passive investors, right? Because it's complicated and there's lots of offerings out there and, trying to make heads or tails of which deals are good and which ones aren't, and, which operators are good at what they do and which ones aren't. It's easier said than done. And so, I partnered up with a GI doc out of New Jersey who had an Excel sheet that he had put together for his own account that he ended up was selling and commercialized it, sold it to a bunch of other doctors and other people, other LPs. So we ended up converting that into a software application and kind of leveraging, all this AI that's out there. And so it's called Passive Advantage. And anyway, I've got lots of things going on, but basically, my mission in life is just to help remove some of this friction that exists in our, little neck of the world, right? Private
Yeah.
placement real estate deals. To just how do we make it more efficient for capital to kind of flow from those who are looking to invest passively into those who, have a passion for being active operators. So
Sure.
anyway,
Well, there's a lot to unpack there. Your partner, Sam Giordano, right? From Passive Advantage. He was on the show. I think he might hold my favorite episode so far. So it was such a great conversation. We'll see if we can beat it today, Lance. But wow, there's so much to unpack. How would you say how has the evolution of how you look at operators evolved over the years from when you kind of just got in, you sold your IT business and all, and we're lending, which is like a form of investing with operators, right? It's you're lending to somebody and hoping that they're going to do what they say they do and execute, to what you do today now, where you're allocating to deals and things like that. How has it evolved? How have how'd you start looking at operators to how you'd look at them today?
yeah, it's interesting, because we pivoted in 2011, and so I'd say from 2011 to 2018, it was, I mean, this has always been a thing. Obviously, syndicating equity, in partnerships to buy real estate, right, is it's nothing new. But of course, the Jobs Act really, kickstarted the whole thing, I think, and obviously just the bull run we went on, coming out of the global financial crisis. So I'd say that it just seemed that early on there was a much higher concentration of, I'd say, competent operators. So if you ran into someone who's doing it like that was what they did, and most of them sort of loathe the fundraising component of the process because they're traders, right? Like they just love finding deals, buy low, sell high, add value, kick dirt, like that's just kind of how they were. But they really struggled with, well, how do I attract outside capital, especially from strangers, outside of, their near network or their friends and family. So I'd say that started to shift where you just started to see a lot more what I call amateurs. I mean, no offense to them, like you got to start someplace, right? But I think just people who were seeing that, hey, there's a money to be made in this, in commercial real estate, multifamily in particular. And so you just started seeing a lot more people who probably had more of a primarily was a marketing focus, right? They just were first and foremost good marketers, kind of fell in love with the idea. I always say it was kind of like, fifth graders teaching third graders. It's like, okay, well, I've graduated the third grade. I'm a couple years ahead of you. It's still fresh. I'm, a lot of exuberance. Let me explain it to you. And obviously that worked well. So, I mean, one thing I learned from that, right, is that like you got to meet people where they're at. It's easier to raise money when you have to acknowledge the fact that they don't understand everything you understand if you've been doing this for a decade or two. And those guys were super successful, right? They'd raised a lot of money. And of course, they rode the wave. And I think the big thing I saw then is that it went from sort of more of these humble operators who were just like, hey, I just love what I'm doing. I mean, we just love real estate. It's what we do to, I think a lot of guys sort of thinking they were geniuses, right? Like just this false confidence that came from, well, look, I went and bought this 200 unit apartment building and sold it for a bunch of money. Like I must be amazing at this, And so, that's the big thing I've seen. It's just like, it's just changed.
Yeah.
You just have to be, and that's what I tell every LP I talk to. It's like, it's just, you want to find the guys who really are passionate about what they do and they're really good at what they do and they're very diligent and they have sort of a risk management mindset. They understand those risks. And I think that, it's, as we see when the market cycles, it changes the whole dynamic. The game gets a lot more challenging, right?
Yeah. Yeah, no, that's great. I say it all the time on the show, doing this for 10 years now, the business has evolved so much over that time. It's unbelievable to think back. It used to be a day where investing in somebody you met off of Facebook or LinkedIn was like you would never do that. You'd have a hard time finding somebody to invest with on Facebook or LinkedIn. Now I go on Facebook, it's like every other post is a sponsored post from an operator. And I feel like it used to be where you go to a seminar and you could learn how to fix and flip a house. Now you can go to a seminar to syndicate a 200 unit apartment complex or to allocate capital into other operators. So it's like the internet has made it where you can find investors probably easier than ever before, but at the same time, that's brought a lot of, like you said, kind of amateur or fresh, new people into the space. So for LPs now, they need to really learn to navigate that space. So is there, from maybe what you do with Passive Advantage, I mean, what would you say are some of the things that you look for that you want to see? Are you one of these people who you got to go through multiple cycles? Would you ever invest in a new operator? What's your criteria look like? And maybe that's not right for everybody. So I'm curious to hear, how you look at it and how you think LP should be looking at it.
Yeah, no, I mean, I'm not allergic to someone who's, maybe hasn't gone through multiple cycles or anything hard and fast like that. I think, first and foremost, it's just you got to look at who their team is and, have they done this? I mean, I think, and you know this as well as anyone, Peter. I mean, it for most really, really good, competent real estate guys, they started with single family, or, it's kind of like you got to earn your way up, right? And so those are the things I just look for, is that there were signs that, hey, they might have been sort of moonlighting and they had a handful of single family rentals and kind of graduated duplex and about a 16 unit. And while they were doing, this other thing, it sort of demonstrates to me that there's this conviction and passion. I mean, I'm a guy who switched careers. Like, I have nothing against people who, I just don't believe that. And I've met lots of very successful people who did something for 45 years of their life and then got into, senior living or whatever, and are now worth $500 million or something. So, I mean, those are just the signs I look for, is like, okay, do you have focus? Have you demonstrated that there's this progression that you went through, this evolution that's taken place? Have you been thoughtful about it? Right. Like those are the things I look for. And if that means that, you've only done a couple deals or syndicated equity a couple deals, then, I'm just going to build in that it's just additional risk to me. And I just want to make sure that I'm going to be compensated for that additional risk. Like, hey, you're just not as experienced. So my expectation is that when we split the pie, that, I'm going to get a bigger share of it than you are. But if you come to me and you're like, this is an 8-pref 50-50 split, and, you've only bought a 75 unit complex, and now you're, yeah, that doesn't make any sense to me. It kind of tells me that you're out to lunch.
Yeah. Yeah. I like that. I like how you're factoring the risk into the equation as well. How do you look at the deals? I mean, is there anything now, and I'm sure as the market's evolved over, your lifespan in this business, how has that evolved over time? I mean, what do you want to see there, especially right now, versus maybe where you were a couple years ago when interest rates were different? Versus the opposite way too, like when you're looking future state, I mean, what do you want to be investing in today, keeping that in mind?
Yeah, well, I think, I mean, the foundation of it, right, is just when you look at a deal specifically, I just want to see that whoever did the underwriting, once the same thing, was thoughtful and did it in a conservative way. I want to see something closer to a base case, right? And all the drivers and dynamics that go into that, they make sense, right? So, right, you've got to look. I mean, it's not complicated. We all know this. I mean, it's like, well, where is it's location, location, location. So where is the real estate located? Is that market growing, right? So just market drivers. Okay, good, check. Is there demand for this, right? Where are the rents at? Those kind of things. So to me, it's just the fundamentals. I mean, and I think that's where my passion lies when it comes to LPs. Like, if you're going to play in this game, then you're going to have to learn these fundamentals, because it's not that simple, right? Like, all these things are interrelated, and you need to be able to evaluate them and then stand back and then assess, once again, what should I as an LP be compensated? I am a limited partner, right? And, what's the risk of this deal and what would make sense? And I think that's how operators should look at it as well. They got to look at it and go, okay, well, there might be a little bit more hair on this deal, But if we think you can extract additional value out of it and that the risks are worth it, and then those risks can be mitigated, then, I can get behind that. But that's what I look for. I mean, so I obviously, like many people, get, I don't know, 10, you know, 10 deals sent in my inbox every week. But those are things I look at as I just go straight to the the high level stuff, like what's your exit cap assumption, right? Versus you're going in. I mean, just simple things to kind of screen them, because they tell me something, right? So if someone's right off the bat, they're buying it at an 8 cap and they're going to exit at a 6 cap, then I immediately ask myself, like, well, what are the dynamics that would lead to that? Now, there's certain asset classes where that could happen, right? Like,
Sure.
for instance, industrial, you go buy a multi-tenant industrial building at an 8 cap with a bunch of local and regional tenants, but you've got some play to basically, those leases are rolling off the books in a year, and you've got tenants in tow that are, institutional grade tenants, then I can get behind that, right? But and obviously it takes time to learn all these things we're talking about and understand how to look at it. But I think those are just that's how I assess a deal.
What would you say are some of the basics? Because I think that's such a great way to look at it, especially for somebody who's maybe totally new. You know what I mean? Somebody who's wants to get into real estate. They've been very successful with whatever they're doing, and now they want to invest passively. They want to get on the LP side. It can be very intimidating, right? And there's so many different, let's say, flavors of the business between industrial, retail, hotels, multifamily, you name it. You know what I mean? Single family lending. What would you say are some of those basic key kind of things? Where would you tell somebody to start? Because I think I like what you're saying about the fundamentals. I think it's very important to when you kind of chunk it up and you look at like, oh, we're going to lay a brick each day, that makes it so much more approachable, right?
Yeah. So, I mean, I think, obviously I'm big on the numbers, and that takes time. But I mean, I think as an LP, the quick way to kind of screen deals in and out is it's looking at the alignment metrics. So, like, in terms of just what's the pref, what's the split, those kind of things. Like I said, if that right off the bat just feels like it's one-sided, then it kind of tells me it's not worth looking at more deeply, because the chance of me being compensated for the risks I'm taking are probably lower. So that, I think that's a quick one. And then just fees, alignment issues. So it's like a 4% acquisition fee on a, $50 million acquisition or something, right? Like, that means that they're going to make money whether I make, like, they get paid whether it's a successful deal or not.
Yeah.
When you get into the pro forma, I think those are the things that you look at. Is just, once again, like, rule number one in real estate is never overpay. So I just want to look at it and say, what are the sales comps? What are they buying it for? Right. Knowing that most of the comps that they're going to be putting in front of you are probably, just using multifamily as an example, are probably all renovated, those are renovated properties. Right. So, I look at it like, well, what are you going to buy this for? And then what are you going to put into it? So what's the total capitalization of the project? Now look at that on a per unit basis and see, if it's close to what all the comps were, then I'm going, this is a little more risky, right? Because you get all this execution risk that you have to take on to renovate it to get to where these other sales were occurring today. I'd rather see it where they're truly getting a good buy, right? So, like, what is the evidence that they're actually getting this at a good price, and that there's room, to kind of move NOI through rent growth and expense reduction, things like that. So, I think those are the quick things you're looking at. It's just, what are the assumptions that they're making? And I think, unfortunately, many operators don't sort of spell out the assumptions they made.
Sure.
Nor do they even show their work, at least in their deck.
Yeah.
So to me, that's just the other red flag, is that if you're not, it just doesn't make any sense to me why. It's show your work. Like, you have a pro forma, like you conducted underwriting.
You put it together somehow, right?
You somehow are telling me I'm going to get a 16.34 IRR and a 1.97x equity. Well, it's very precise, right? So how did you arrive at that conclusion? Show your work. The thing that bothers me is that they just assume, well, these LPs don't know what they're doing, so why show it to them, right? And I'm like, well, if you never show it to them, how are they ever going to learn? And it doesn't matter anyway. It's irrelevant.
Yeah.
You should show your work, because that's what professionals do. look, this is what we did. These are the assumptions we made. This is why we stand behind these assumptions. That's what you should be communicating to me in the investment summary.
Yeah.
So, um,
That's the argument I've heard before, where it's just like I think a lot of operators are concerned, that they're going to show too much. It's going to just it's going to go right over their head, or, they're going to get all confused. They're not going to know what they're looking at. So they kind of decide to not do it. And I think that's where it's kind of important that, like you said it before, the magic words is meet people where they're at, and that's where a conversation helps, but also like just having different levels of marketing materials, having like that one page versus the pitch deck versus like this longer explanation, so that people can kind of go about it the way, learn in phases, that kind of thing. Because I think at this stage of the game, when like what we talked about before, the internet and social media has made it so accessible for almost anybody, that stayed at a Motel 6 to be an operator or to be a fund manager. It's like, how do you stand out? And I think that's the way you do it, right?
Yeah, that's what I think. I mean, I think, it's, you got to, as an operator, someone who's looking to raise money, you just need to take advantage of the fact that being transparent is not yet table stakes. So you shouldn't look at it like be afraid of it or think it's over their head or whatever you convince yourself of as to why you're not doing it. Um, because I just don't believe it's true. And I think this behavior was spawned because there was so much FOMO, in 18, 19, 20, 21,
Yeah.
where people were being shut out of deals. And so operators got away from that generation of operators were getting away with, they didn't have to share very much to still generate the equity they needed.
Yeah.
Being someone who came up into the industry, at a time where it was much, much more challenging, which is similar to the times we're in now, the good news, it never goes out of style. Like, so being more transparent and, just sharing all the information. I'm not saying like talk down to people or be condescending and use all this jargon. I mean, clearly it's okay to translate it into terms that, an ordinary average person would understand, but it's just be ready to defend, your work. I mean, defend your thesis, defend what's going on, demonstrate, don't be afraid to talk about the risks of the deal, because how can you generate a 15, 16, 17% IRR on a deal without taking on risk? Like, you, by definition, you have to,
Yeah.
right? And so it's pointing that out, like, hey, yeah, I mean, we're able to get an 18 IRR on a deal like this because we're gonna have to renovate 50% of the units. Like, renovation risk, that execution risk is real. You got to hire subcontractors, material costs fluctuate, things can happen, buildings can burn down, like all sorts of things can happen, tenants move out and then you got to get them back in, all that sort of stuff is why there's an opportunity to maybe generate that high of a return. So talking about it, if you're a pro, shouldn't be scary at all. In fact, you should relish it. Sure. Because it's your chance to demonstrate that you're competent and that you have a full grasp of what's going on. And it doesn't mean you can mitigate all the risk away. That's impossible. But pointing out, this is a potential issue and we're aware of it, and here's our plan to deal with it, it just seems prudent to me. And I think that that's how you engender trust, is explaining the method to your madness. But like I said, it's just, I think there's a whole breed of operators out there who were able to be successful doing it a different way. And old habits are hard to break. Right. And, it just, they just keep kind of going back to doing it the same way. And now they're realizing like, it's just not working as well as it once did.
Yeah. Yeah, I feel very uncomfortable with uneducated investors in that sense. I mean, I feel like when you do that, it attracts a better kind of quality investor that looks for that kind of information, that wants to see that kind of information. When I get questions like that, I respect it. You know what I mean? I appreciate it. Like you said, I feel like a lot of times in the battle of fundraising, it's like you should be able to defend those things and all. And I would almost expect investors to kind of have that conversation, where they're trying to poke holes in your thesis and your comps and your assumptions and projections and all that kind of stuff. Like I respect it. I appreciate those conversations. It scares me when investors don't do that, because I feel like they're the people that don't necessarily appreciate and understand the risk that's involved. And when things, if they go south, or there's hiccups and things like that, they're the people that scare me the most. I mean, because it's like I've had conversations over the years where it's like people look at the risk factors in a PPM and they're like, all right, well, what's the real risk? It's like every single one of is listed in there, and probably even more that you didn't think of, or the attorney didn't think of, is there. I mean, there's real risk involved in this business, and I think probably people know that now more than ever, with everything that's going on over the last couple of years with interest rates and new development, new supply, all that kind of stuff going on.
Yeah, I'm with you. I'm the same way. Like I always tell them, like, there's no dumb questions. Like, it's just like I want them to be comfortable for the reason that you're referring to, is that I'd rather them be informed. I want them to know what they're getting into. I want them to go in eyes wide open. And and it's always worked well for me. So I guess it's just easy for me to say, but and then there's times too where you just feel like, hey, it's my suggestion to you is that maybe just hang around and read our newsletter and watch our webinars we're doing, and like prescribe that as the solution, and basically say, I don't think you're ready to invest yet. I think you just need to get a better hang of kind of how all this works.
Yeah.
I know you're anxious to put your money to work, and I know you're anxious to do that, but that's my recommendation wholeheartedly. And of course, what ends up happening when you do that, you're like taking something away from them and they want it even more. So it happens to kind of work either way. But I mean, when you do it in an authentic way, where you're just like, hey, I mean, and this, Peter, like, these are the things that I teach. That's where I'm like big on, like, put together a master class, like create these assets, these resources that you can use and prescribe to them in the sales process as, hey, watch my 90-minute masterclass on, our strategy. Like, no, like, why don't you set aside 90 minutes this weekend and take some time to go through that, jot down some questions, book a call, let me help you. I mean, it works, man. Like, this is how you build a tribe of people who believe in you. And I say that all the time. Like, investors and LPs they're not customers, and they're not clients. Okay. Yeah. They are partners. Yeah. They're silent partners. And so you're recruiting partners, and that's just different. Right. So, and many times they want to live vicariously through you. They're a dentist, they're whatever, they're busy doing something else. And real estate's kind of sexy. It's kind of neat. Right. So, the more you can get them integrated and understanding what you're doing, you're creating ambassadors and advocates and people who are, have loyalty to you, who really believe in what you're doing. That's all good stuff. And so if you're just rushing to get them to wire you $100,000 for this deal, because, you've got to close in 45 days, I just think it ends up being short-sighted in the long run. And then conversely, for those LPs who just want to press the easy button, that's where, I mean, I'm just quick to say, like, I know that you just want this to be easy. Yeah. Like, I always say, Lance, just tell me what I should invest in, or what should I do? And I'm like, I can't tell you what to do. Right. If you're not willing to commit to educating yourself to understand this stuff, then you're just a speculator. You're no better than them. Like, and you don't want to be a speculator. Like, speculators it doesn't work out very well.
Sure.
Right. And I think that's the whole point of this, is we're saying, the stock market is more like the casino. You have no control over it. There's all sorts of factors behind the scenes that you don't. I'm not anti stock market, don't get me wrong, but I'm just saying, like, and you can learn it, because it's the same thing there. Like, there's fundamental investing, which is looking at the company's underlying balance sheets and their assets and their strategy going forward, and then deciding which stocks you're going to buy based on that, like Warren Buffett tells us to do. And then there's speculators or momentum traders who look at, they're not choosing stocks based on anything to do with that, but based on the movements of the market. So it's just, we're all investors. I mean, every one of us who woke up this morning is an investor. You have to think that way first. And those are the things that, I just tried to impart on them that it don't do that, right? You're
Yeah.
better off not doing anything and waiting until you're ready to kind of commit to actually understanding how these things work.
Yeah.
You'll never be as good as the operator because they do it all day long. And that's not the expectation, but it's to at least be able to understand what's going on and for it to make sense to you and be able to go from asking what maybe aren't the most educated questions into ones that are more educated and informed.
Sure. I love that. I love that advice. I think reminds me of those commercials on TV for like the car company, Carvana or something, where it's like they make it super easy. It's like the easiest process ever. You'll buy a car sitting on your sofa, and it's like, should it be that easy? You only buy a car once every 5 to 10 years or so. You know what I mean? It's just like, this is not something you do every week. It's like, this should be a more informed process. You should do a lot of research. You should talk to people, go places, test drive cars. Like, at least that's the way I look at it. And I think what you're saying, when you're investing your hard-earned money and it's going to be tied up in potentially 3 to 5 to 7+ years or so, it's like you said, this is a partnership. You're not like a customer that just bought a vacuum or something like that and you can return it or something. Yeah, it's a partnership. You're going to be in it for a while. And like anything, ideally, if you do all that time in the research and all, you want that relationship to last. You want to, most LPs I know, as they get to a certain point in their investing, they want to make it a little easier, when tax time comes and they got 60 different K1s they're chasing or something like that. So as time goes on, they want to kind of, work with a few people that they like and they understand and that they have that rapport with and they respect them. It's a two-way street. So I think that's great advice. And it kind of leads in well to my next question. We've been talking a lot about, this from a investor's perspective. And we've talked a little bit about it from, the operator's perspective, but I know you from 10X. What would you say is kind of the fundamentals for the operator? What do they need to have to attract capital, and be successful raising money? Well, like you said, I know a lot of operators that love what they do. They're walking spreadsheets, they're deal guys. They love that part of the business, but boy, do they struggle when it comes to raising capital and networking and kind of, some selflessly, ideally promoting themselves and marketing. It's like they just totally struggle with that. So what would you say are some of the fundamentals there?
Yeah, I mean, I think where most get it wrong is that they don't know what differentiates them vis-a-vis someone else who woke up this morning executing the same strategy. So they aren't able to articulate. It's not that they're not differentiated, it's that they're not able to articulate the ways in which they're differentiated. And oftentimes the best operators have a harder time doing that because they believe that what they do is what everyone else is doing.
Sure.
Like it, and that's what I've found. So it really is, the process I've created this, we call it the magnetic messaging framework, right? Like it's a process you go through to sort of try to unearth what makes you different. What are your 3 uniques, right? And so I think it's a messaging problem. It's a positioning problem that most of them have. And I think, the reason I built it was for guys who really are good at what they do and love what they do, because I believe that the better you get at doing what you do, then your product becomes better, becomes easier to sell. So really, we're not pitching the offerings, the ways that people can invest with us. We shouldn't be pitching those. We should be leading with those is the pitch. Our pitch is, let me explain to you why we're so bullish on our strategy specifically. So where many operators struggle is that their strategy is too broad. It's not specific enough, right? Like they get their hands in too many things, right? Oftentimes they need to focus. What can you be the best in the world at? Right. And oftentimes that means just shrinking your geography for an example, right? Like,
sure.
Stop trying to do deals in 3 states, figure out how to do deals, the best deals in a single market or something like that. Specificity matters. And that leads, and the reason I say that is because then it puts you in a better position to perform in the long run, right? Like the more narrow you are, then the greater the chance you actually can perform and execute on making that happen. And so I think that's the biggest area of opportunity, but it requires being a bit more thoughtful. That means like pausing and reflecting and thinking through and thinking more deeply in order to sort of have that. Because then what happens is that you can develop what I call like talk tracks, right? Because now like you've got this framework for how you talk about what you do, why you do what you do, and how you do what you do. And a lot of times too, what happens is that you find yourself being like, I wish I could say this, but I can't say this because it's not what we do. So now you've got this current state, and now you got this new future state. And you're like,
Sure.
what do we need to do so that we can say that this is how we do it?
Mm.
Right? You've got priorities, and you're running your company like a real business.
Yeah.
And getting everyone involved, I think that's the other mistake, because often you have sort of like, well, I'm the main guy and it's my job to raise money, and then everyone else is doing deals and managing the assets, whatever. And they're like siloed. They're two different things.
Sure.
Whereas I'm like, this creates a more integrated, cohesive way of approaching it. Like if everyone realizes they have a role in raising more money, because if they just do their job 1% better a day, then we've got something to talk about that's more interesting. And we don't look so vanilla anymore. We don't just look like every other multifamily, value add guy. We've got our own, we are who we are. We believe what we believe, and those are the things we talk about. That's what attracts people into you, right? I mean, obviously there's lead gen. You need to sort of dangle bait in front of, people who have money who might want to invest, but when they get in, they're going to fall in love with you because you have a compelling message and you're able to articulate it with conviction and passion, right? And it goes beyond just making money. It's like there's got to be a reason why you do what you do beyond just making money.
Yeah.
Right. Because otherwise, when the money dries up, then you'll bolt and you'll start doing something different.
Sure, exactly. That's great advice, not just for marketing and like the story and the pitch and all that kind of stuff. I mean, that's just good fundamental business advice. I mean, just for your business to thrive and to last long and and prosper, kind of a thing, isn't it? It's like it's so foundational.
Well, yeah, it is. And that's why I always say, like, people are like, well, you're like the fundraising guy or whatever, you're all about marketing and sales. And I'm like, yeah, I mean, I am in a way, but really I'm more about, I want to help people build organizations. I mean, build organizations that are built to last, like that can thrive and grow. Because when you think about it, once again, going back to the partner analogy, people want to be involved in things that they believe will withstand the test of time, right? And that's how they're, whether it's conscious or subconscious, that's how they're looking at it. And so if they're going to participate with you and become a partner in your business ostensibly or tangentially, then those things all sound good. I want to know that you know how to run a business. I want to know that you know how to hire people, how you manage people, how you lead people, right? That you stand for something, that there's a method to your madness, you have process, you have all those things. So to me, if you get good at those things, that's when, and then those should lead to finding great deals, right? And then you find great deals and your ability to execute and add value to those projects and, run the business plan and you get the results. Like those all go hand in hand. I just think everyone kind of overlooks that, thinking, I just need more followers on LinkedIn. I'm like, yeah, you do, but like that's the secondary. That's like secondary to like, do you have anything interesting to say? Are you interesting? Right. And are you building something that's worth wanting to be involved in? And then the other side benefit, right, is that you build a great organization. It's easier to recruit great people. Yeah. Right. It's easier to get loans because lenders fall in love with you. Like all the stakeholders fall in love with you. Sellers want to sell their properties to you. Right. Sure. Like it goes on and on and on, but it's so often overlooked. And when I meet guys and I ask them like, hey, do you do quarterly planning? Yeah, we kind of, I'm like, okay, do you have like a weekly like leadership meeting, like where you talk about, your progress on your priorities and no, do you have a hiring process? No, yeah. I'm like, okay, you're not yet running a real business.
Exactly. Yeah.
Right. So you're so consumed with how do I raise more money? And you're just overlooking the very things that if you focus more time, effort, and energy on those things, you'd be more focused and you get better results. And, it's for whatever reason, it's not obvious, I guess.
You know what I'm picturing in my mind is the iceberg analogy, where it's like they're focusing on that 10% that you can see above the surface, when it's that 90% that you can't see is where that all came from. So it's like if you focus on all those fundamentals, like you said, all those things, because I think a lot of people look at it as like they're investing in deals, they're managing their portfolio, but they don't look at it as a business. And I was really fortunate before we started GSP to be at a company that really had hired a lot of business consultants, really evolved from, the kind of the portfolio boutique kind of shop to looking at things more from a corporate and a, structured and business perspective. And that's really made me think differently about that. And that's exactly what I'm picturing. It's just that iceberg, where like you said, they're focusing on the problem, or like the kind of the result of all those other, things that are working. And if they just focused on everything else there, like that's going to generate all the content, all the stuff that you need when you're doing those things right, and you're having those meetings, and you're documenting things and have the plans and goals and all that. Now it's so much easier to take that and to make posts out of that, or to do videos in that, or put that into your pitch deck and all. Whereas before, it's like you're just kind of making shit up, right? It's just like it's not real, you know what I mean? And in sales, it's very difficult. You can only sell something so long if you don't believe in it, right? It's just that's just doesn't work that way.
Yeah, you nailed it. That's what I mean. At the heart of all of it is just this conviction that comes out. As I say, you don't have to be the most charismatic person. You don't have to be the most articulate. Those things aren't required. But what is required is conviction, belief in what you're doing. And that's where some of these it's just paradigm shifts, or you just need to shatter up your paradigms. It's just like you're looking at the problem the wrong way.
Yeah.
And you start to look at it differently. I mean, I've seen it over and over again. Like I said, I've been in this business a long time. I've consulted with hundreds of operators and lenders who are all have their big problem of how do I raise more money. And when I look at those who've crossed the chasm, so to speak, and found success, that's the commonality, is that they thought of themselves as business builders first and foremost, and they had passion, conviction, focus, discipline, what they were doing. Right. And then they talked about that.
Yeah.
And that's what led to people being drawn to them and wanting to be involved. Once again, recruiting partners. They want to be involved. I want to be involved with what that group is doing. I like what they're doing. I buy into it. But I think for most people, it's just that what I teach and preach, or whatever you want to say, it doesn't happen overnight. And I think that's
sure.
Because every person, how many times a week someone comes to me, Lance, I need to raise $6 million. Can you raise the money for me? Or, how do I raise $6 million? I'm like, you're sunk. Like, I'm sorry, I can't help you. Because if you can't shake your tree and raise the 6 million, it's not going to happen in 60 days. Sure. And what I'm going to ask you to do is basically rebuild yourself from scratch. But then you have to ask yourself, do you really want it? Right? Like, is this what you really do? You really want it bad enough to do it the right way? And as I'm sure you can imagine, most people really don't. They're just like, I don't want to do the work. I want to go find the easy button. Because they believe it's out there, and I'm like, I look for it for years. It doesn't exist.
That's great. A great piece of advice. And like you said, kind of for both sides. I mean, that's where I think so much of this conversation, whether we're talking to the LPs and with what you do with Passive Advantage and all, and that side of the business, or what you're doing with 10X, and you're talking operators, there's so much crossover, because it really just comes down to the fundamentals at the end of the day. And I think it's important for both sides to be listening and absorbing content from both sides of the world, so that they can kind of better get a read on the full spectrum of the business, right?
Yeah, I agree. And that's what I always say. Like, on one hand, I'm teaching the operators how to position themselves so that they're attracted to LPs. I'm teaching the LPs to go look for the very things I'm teaching the operators to do, right? So I'm saying, do they have these things in place? Is there a culture? Do they have core values? Do they have a purpose? Do they have these things? Because if they do, the chance of them being able to execute any business plan and navigate through difficult times is much greater than those who don't. Right? Those guys will fall apart, because it's not always going to be easy. What operators do is not easy. It's a lot of work. So it's just, you want to know they have staying power. And like I said, there's thoughtfulness involved in this. Like, it translates into results. But, people who are just throwing, 50 offers out and just hoping one, gets, they awarded a deal and whatever. I mean, so it's just, those are the questions that LP, they need to learn to kind of poke a little bit, and go a little bit deeper. Yeah. And you can figure out pretty quickly whether there's any substance to the group you're talking to. And I think for operators, you need to understand that if they're talking to you, they're probably talking to 3 other groups.
Sure.
right? Like, so it's just the stuff that I'm teaching, although it's like, yeah, it sounds like a lot of hard work and it'll take time. You just have a decision to make. I mean, for every group that hears the things I teach and embraces them and does them,
Mhm.
your competitors are getting better.
Yeah.
It's just, and LPs are getting smarter.
Yeah. Yeah.
So
Well, I think the business has evolved so much, and the last couple years, people getting burnt and dings and bruises, kind of maybe operating like how some of the things we've been talking about, where they didn't do a lot of that stuff, and then just the sheer competition now in the space that social media and weekend seminars and courses has created. I just think it's so important now more than ever. You have to do those things if you really, or if you're committed to this, if you're in it for the long haul, you have to do those things in order to survive, or you're really going to tread water. And to your point, the LP communities, companies like Passive Advantage and all, they're becoming more and more prevalent because I think they're supplying a demand. They're reaching a demand in the market where it's just needed. People need that now more than ever. And so I just think it's for the operators. It's like you need to do that. And if you're not willing to, then you got to know your days are kind of numbered in a sense.
yeah, for sure. And it sort of proves the point. It just means it demonstrates that you're not really committed to doing what
Exactly.
it takes. And it's your decision, and then oftentimes when I run these strategic planning sessions, right, like it's like, okay, what's your big, hairy, audacious goal, your 10-year target or whatever, and $1 billion in, AUM or
Yeah.
whatever, and I'm always like quick to say like, okay, but now picture yourself 10 years from today with $1 billion in AUM. You wake up and you go to work. Is that what you want out of your life?
Mm.
Like, just imagine what that looks like
Yeah.
compared to where you are today, the size, the scope, the scale, the whatever. You need to count the cost. You need to ask yourself, what do you really want out of your life,
Mm.
right? From your life? What do you want your life to be? And just unbridled ambition,
Mm.
you just have to think it through. And this is coming from, I might look young, but I mean, I'm a graybeard, and I was a young buck who was super, super ambitious. And I think as you get older, you just realize like, you have to, whether you're an operator or an LP, like you just got to ask yourself, what do you want to be when you grow up? Like
Sure.
what do you really want to accomplish? What do you want out of your life? What do you want your life to look like? And I think, it's hard and we don't want to go there and be that reflective, but it kind of
Mm.
starts there, and then you can reverse engineer it
Yeah.
from there, into today. And because what you might say is you realize like, yeah, I guess it turns out I'm not really all that passionate about, buying multifamily or whatever. I just did it because I wanted to make money.
Yeah. Yeah. It
And
was a means to an end.
it's just a means to an end. And I'm like, hey, first step is just to recognize that that's why you did it. Right. It's not good, bad. It is what it is, but it's just, then you had to ask yourself, is that won't sustain.
Mhm.
Right. Like it when it gets hard, you just got to think that through, that there's got to be something more. And I mean, oftentimes when I run people through this, it's just like, let's just dig a little deeper. Like what does it really get you out of bed in the morning?
Mm.
Right?
Yeah.
And even if you have to develop it, it's just, it has to go beyond that. It's impacting communities, or it really is just the fact that you just love that you can go do what you're good at and what you love doing, and
Mm.
allows others to have more financial freedom and time freedom.
Yeah.
Like, you don't need to be differentiated on that. Like, but if that's what drives you and you love the fact that you get to send money, ACH money to investors every quarter, and knowing that they get to kind of, fulfill who they are, then you build an organization around that. That's what we do. This is why we do what we do.
Mhm.
That's okay. But it's got to be genuine. It's
Yeah.
got to be authentic.
Yeah. Wow, you're speaking my language. The brand and the business behind this podcast, The Credit Life, is all about that. Because I think it's so important. A lot of people do this in their business. To your point, a lot of people don't do it too. Is that reflection, is taking that time on a quarterly basis, on an annual, semi-annual basis, to reflect on what's the BHAG, what's the goals, what's the vision, and then, like you said, kind of reverse engineering it. How do you get there? Because I think that's one of the things in this business we look at other people's success, or we look at, big national companies that have been around for a long time. We think we want to get there. But to your point, it's like in order to get there, you almost need to dial down to like a pencil point where you just get really focused and do something really, really well. And then it typically evolves out from there. I mean, you can almost see that in every success story. It's like they started off doing something in a very specific location, with a very specific strategy. And it wasn't until years of compounding that and market shifts and different things like that did the business evolve and become, this regional, or national or global firm or something like that. So I think that's so important. But so it's painful to do that, right? To reflect like that, because it's painful because you're not there now. You know what I mean? Because sometimes it's a realization of how far you maybe are from it. Maybe it's a realization that, like you said, this isn't necessarily what you want to be doing, or you're not as passionate as you'd hope you'd be, or thought you were going to be, or something like that. It's painful to do those things, but on the opposite end of that is really the freedom of finding what it is that is going to drive you. You know what I mean? So I can't suggest enough for people to take that time. And I know in my life, anytime I do that, I feel better. But yeah, sometimes it takes me longer. And then that's the regret, is when it's like, God, why didn't I do that, weeks ago when I thought about it, or months ago or years ago or whatever. It's just anytime you can reflect and you can dial in on what that is and really be honest with yourself, you can't go wrong. You know, it leads to success and it leads to just a better life overall.
Yeah, for sure. Yeah, it leads to, to joy and
Yeah.
and happiness and contentment and fulfillment. And those things are important things, right? And so but yeah, it requires a bit of thought. And and it's okay. I always say it's your prerogative to change our minds, right? Like, so I think that's the other thing, is just the more we do that and we're thoughtful and we think it through, and it will lead to maybe not better financial outcomes or whatever, but those are things we should be seeking.
Yeah.
Is just, like I said, just living a life of joy and contentment and whatever it is. And but teach his own. Like, we all have to kind of figure that out. But I just know in our line of work and this business, there's anything. This is not an easy business. This is very complicated, highly regulated. This isn't for the faint of heart. And that's why I say, like, you have to love what you do, right? Like, in order to do this, because there's just a lot of moving parts and lots of things, and the risk that you're taking, and the potential reputation risk if you're not doing the right things. And it's I know no other gurus out there saying this stuff, because they're trying to make you feel like it's just easiest in the world.
Easy, yeah, exactly.
But I mean, I can't help it. I mean, I've lived it. I've went through the gauntlet, and it's to have the staying power. You've got to appreciate all this complexity and all this risk that you're taking, and the responsibility to manage that risk. And that's what I say for the LPs, like, that's what you're looking for. I know you want to hear some super easy answer, but it's like, that's what you're trying to ascertain, is that the group that you're about to entrust your hard-earned money to be a steward of your capital, are they made of that stuff? Right. Yeah. And I think you're just better off not investing, and waiting to invest until you can sort of get a good feeling that that's sort of what they're made of. You'll just find more success in the long run.
Yeah. Well, Lance, this has been an amazing conversation. I knew it would be, but yeah, this is you blew out even my expectations. So you gave Sam a run for his money on just a great episode with a lot of golden nuggets throughout. So I appreciate you being here. For the operators that want to get in touch with you, learn about the magnetic message and what you do there, how can they do that? For the LPs that want to learn more from that side of the business and the education and find some deal flow, that kind of thing, how can they do that?
Yeah. So if you're an operator, private lender and allocator, you can go to 10xyourcapitalraise.com. We have a capital raise accelerator, little free course you can kind of run through. You can also go to my website, lancepederson.com. I have another slightly different course that I always say, start there, right? As you can tell, I kind of wax a little philosophical, but I think that these are the important things to kind of, so, hey, I love putting out free content, all those things. We'd love to have you in the 10X community at some point. where we kind of help you, implement these things. And then, you can go to passiveadvantage.com, sign up. It's free for LP Deal Analyzer. You can analyze a few deals that people are sending you. And we've got webinars every month that we're doing. And as you can tell, I'm a teacher. I'm a coach. That's where I'm at in this stage of my life. I love to share what I've learned, usually the hard way, with others, so that they don't have to, go through the pain that's
sure, exactly. Sometimes you gotta feel the pain, but if you can learn from others' pain as well, to complement your own pain, avoid a little bit, it's always a good way to do it.
Yeah, that's right. Yeah, and you can connect with me on LinkedIn too. So anyone who go to LinkedIn, Lance Pederson, connect. I'll connect back. So I probably shouldn't accept every connection I get. But what the hell?
I only do if there's if I have a good number of mutual friends at this point. Because you get a lot where you just think I don't see any connection. If there's real estate, it's like, all right, that's But I see stuff where it's like, why are we connecting? But you never know. It could be an investor or something.
There you go.
Well, Lance, this has been a great conversation. Really appreciate you taking the time.
Yeah, my pleasure. Thanks, Peter.